Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Hello, entrepreneurs. Welcome back. This week, we interview Mauricio Roque, founder of Brickstone Investment Group. Welcome, Mauricio.
Thank you, George. Thanks for having me.
So Mauricio, let's start by asking, how did you get started in real estate?
Well, George, I've been doing residential real estate in Southern California for about 7 years now. And it's a very rewarding career. I love it. I love working with first-time home buyers. But my challenge was the time. Although I was working for myself, there's just not too much time. I wasn't spending too much time with my family, working weekends from 5 in the morning to sometimes 7, 8, 9 p.m. And also the fact, and I think if there's any real estate agents listening, that they can they'll understand this. You give someone the keys to their first home, and it's a beautiful moment. The family's there, everyone's celebrating. You're driving home, the sun is setting, perfect day, and then you get home and you realize, okay, so now I'm unemployed again. Now I have to start all over again. So I just wanted something where I could sell one time, and for that one time I could get paid at least for a year or so. And I wasn't sure what it was until I found multifamily.
Yeah, I love it. So that just leads right into my next question. Do you ever have that sort of aha moment where you realize what you're doing wasn't reaching your financial goals? And I think that's it, is that you're out there, you're grinding every day as an employee, and wow, the moment you stop working, your paycheck is gone.
Exactly. And when you go to meetings and trainings in residential real estate, obviously they tell you you're an entrepreneur, et cetera, et cetera. But it's very difficult to stop working and continue getting paid. I mean, you have to be grinding every single day. So although I was working for myself, it didn't feel like I was reaching that. I was getting anywhere close to having any type of financial freedom anytime soon.
Yeah, I just love it. And so then you discovered entrepreneurship, and the rest is history. So before we go into your deals, one of the things that I like about your story is that you are working very closely with your wife, Princess. So can you tell us a little bit about the process of, you got interested in doing multifamily real estate and how you got her on board, and how things are going right now?
Yeah, absolutely. So my wife and I, we love spending time together. We live in a beautiful place in Southern California where people go kayaking, they go hiking, they go wine tasting, all that stuff. But she was working as a full-time engineer, 9 to 5, and I was working as a real estate agent. In most cases, I'm showing homes after 5 when people get off work, and I'm working weekends. So as much as we love spending time with each other, we didn't really have that option. Unless something canceled, that's the only the only chance that we could get. So we knew we wanted to find something. When I attended a conference about multifamily, I'd done a lot of research before, of course. I remember speaking to people in the lobby, and I gave my wife a call and I said, hey, baby, I found a way for us to spend more time together. And it's real estate related, because I didn't want to do anything new. I didn't want to go into trading or selling any other products. I wanted it to be real estate. So soon after that, what we did is we started listening to podcasts together. We would do sushi nights or wine nights or whatever, and we would put one episode and we would start listening and start educating ourselves.
Yeah, I love it. And I know from your other interviews, I think she said that the Korean barbecue was particularly effective. So that's perfect.
It was.
So as for me, on Monday, I'm going to have my first meetup here in Detroit, and I told my wife there's going to be pizza and beer. So
all right, perfect.
it's a true time-tested formula.
I think so. And at the end of the day, the more people you hear, and with the more challenges you hear and success, it comes to a point where you realize, hey, if others can do it, I can do it as well. If I can do it myself, then I can connect with others that have or are willing to, and we can do it together.
I love it. And So now let's move on to your deals, right? So you educated yourself, you got your wife on board, you two were working at this, grinding for quite some time. And then, hey, there's some bumps in the road, right? I mean, most people don't get their first deal. So take us through the story.
Yes, we were working really hard. I was going to a different market, one of the top 10 markets. I was going there at least once a month. I was submitting at least 2 LOIs per month. I was meeting with brokers, touring properties, lenders, you name it, property managers. But things were getting very competitive. And after about 5 months of just getting crushed with my offers, I decided to start looking at a different market. Once I did, things got a little bit easier, and I was able to get our first offer accepted. And this is a true story, George, on February 28th of 2020. And I flew to see the property on March 3rd, and we finalized the deal. We said, okay, perfect, it's great. I walked it, I love it. And the week after that is when COVID hit and when the lockdown happened. So at that point, we were at the hospital. We were expecting our daughter. She was born on March 12th. 2 days later, everything's closed. And when I talked to the property manager after a couple of days, everyone said the same thing. Look, right now, we don't know what's happening. Tenants do not want, I know you have an inspection next week, but tenants don't want an inspector going in, a stranger from one unit, then going to theirs and another unit and another unit. There's a lot of fear around the time. There's a lot of uncertainty. So we weren't sure exactly which direction we were going until for about a month and a half, if you remember, March and April of last year, it was just very tough. Even financing changed. Lenders suddenly needed 12 months of reserves, and that didn't make our numbers work. Suddenly, the seller wanted more money upfront, non-refundable, and as much as I fought to keep the deal alive, we just couldn't make it work, and we ended up sending a cancellation at the end of April of last year.
Right. And so then I understand you went through a couple more iterations before you finally got your deal. And did you have to alter your due diligence? I know a lot of people, they completely altered the way that they were doing things.
Yeah, I mean, what happened was after COVID, we realized that we couldn't travel. I couldn't travel. I had a newborn at home. I couldn't risk it. So what I did is we started networking a lot. We started connecting with individuals all throughout the nation. I mean, we spoke to people that are even in Alaska. We spoke to people all over the place until we found a partner that was in the market that we were working on. And after a long set of phone calls and doing some underwriting together via Zoom, we realized, hey, you know what, we're actually a good match. You can do the due diligence. I can bring the deal to the table. I don't have to fly out there until the deal's closed. So that was the adjustment that we made.
That's awesome. And I see one of the threads that I find throughout all of the interviews I've had is that a lot of people that are movers and shakers, I mean, they had a really great pandemic time. So would you say that these lockdowns, do you think that they helped or hurt your growth as a real estate investor?
I think, I mean, I know 100% that it helped. It didn't feel like it at first. At first, it was tough. It was, I mean, after that deal, after we couldn't make that one work, the question is, how do we get another one? We don't know if COVID is going away in June or July or August. Now, of course, we know that didn't happen, but there was a lot of uncertainty. So there was a couple of months in which I couldn't travel. There was no new deals. Brokers, they didn't want to risk their commission on giving a deal to a rookie like me. They wanted to work with a person that has 3,000 doors, 4,000 doors, and they can just sell it off market, right? So there was no opportunities. So it forced us, my wife and I, to start networking, is to start contacting other people. What we discovered was that we were originally trying just to find another partner, but what ended up happening is that we just found a lot of great friends, a lot of people that started motivating us, a lot of people that started inspiring us and sharing their struggles as well. So when you find someone that's also struggling and you realize, hey, you know what, I'm not the only one, because you tend to hear a lot of success out there, but you don't really hear the struggles.
Yeah, that's beautiful. And I think the struggles, that's really what inspires people. Anybody who's an entrepreneur, anybody who's made things work has gone through a lot. Now, I know for me, when COVID hit over here in Michigan, I was about to close my first hard money loan, and I called up the title company and I said, hey, I just want to confirm our closing today. And they said, oh no, lenders are not allowed at the closing table. Well, thanks. You just saved me a long drive out to Livonia. So it's pretty amazing. Yeah. And so then just to pick up on your thread of networking, that I think that's just been amazing. I mean, it's opened up the world, I think, to real estate investors. Before this, people would go to their local RIA, and that was wonderful. But you can only shake so many hands. And now people have opened their mind to that. Hey, I've got Zoom. I can talk to absolutely anyone. And I just want to share one other personal thing. Ellis Hammond gave me, I think, some of the best advice about networking. He said, hey, don't call me up to spend a half hour with me. Invite me on your podcast. And ever since I've been following that advice, I feel like I'm getting a twofer, right? I get to meet great people like you, Mauricio, and I also get some great content out of it.
Yeah, and also there's people that may not have the time to attend the virtual meetups as well because of work or family or so, but they can listen to the podcast when they're driving. I know I did that a lot, so it really helps. I think you hit the nail on the head. I mean, one of my partners is in North Carolina. Obviously, he would have not come to any meetup that I would have organized. So Zoom made this possible, and now we have this incredible network of people that we can help and support each other.
Yeah, that's just absolutely amazing. And so then let's take it a little deeper. Now, I don't know, do you have a thought leadership program, or are you more interested just on going onto podcasts as a guest?
At this time, I prefer going as a guest. We're very busy with the other stuff that we're doing, and I feel that especially real estate agents that would listen, they could probably, I mean, hopefully they'll get motivated and think, you know what, this is what's happening to me. I don't want to keep doing open houses for the next 5 years. Maybe I should look into this.
That's great. That's a great, I mean, I love that as a strategy. Every time I get invited on a podcast, I think this is wonderful. And there's no editing at the end of today's session.
I
Uh,
love
and
it.
so, how are you promoting yourself as a guest?
At this point, to be honest with you, I'm not really promoting myself as much as I should. It's definitely something that I need to work on. We have just been very busy with the deals that we have now, but it's something that I have been brainstorming with my wife, and it's something that we're going to start doing a lot. Different sources, LinkedIn, so just mainly social media. I think that's probably the easiest route.
That's great. And if you're not aware, Mauricio, his career as a speaker is taking off. So I understand that you were just a speaker at Dealmaker.
Yes, sir. Well, the funny thing or the interesting thing is I'm not really a public speaker. And this is a true story. I ran into Michael at the event and I asked him, hey, Michael, we have the interview tomorrow. Is there anything specific that you want me to say? Anything that you're going to ask me? And he just looked at me and said, I don't know. We'll figure it out tomorrow. So I love when it's not edited. I think people really like that versus, it sounds like it's reading a script. So I love what you're doing.
Yeah, I love that too. I do very little editing of the podcast, usually just the dead space at the beginning and the end. And I do have guests that ask, are you going to edit this to make me sound smarter? And it's never necessary. You're very conversational. So obviously I think that comes across from being a realtor. You're talking to people all day long.
Yeah,
And yeah, that
it
really
really
comes
feels
across.
like if I was just trying to connect with you via Zoom, just trying to see if we can work together. That's really what this feels like. It's great.
Yeah, it is. And for some people, it does not come as easily to be the people person and to be the public speaker. I know I went to Toastmasters. That was helpful to me. But what really helped my career take off was doing interviews like this and realizing that it's all about a conversation. When I did my first maybe 10 episodes, and I realized all of the best material was either the pregame or the after game, I realized that it's really all about being comfortable, unburdening yourself, and just helping somebody tell their story. So, yeah,
Absolutely. Keeping it natural, huh?
thank you. And so let's back up a little bit. So you talked about your first deal. So that fell through because of COVID during the due diligence. I think you talked a little bit about your second deal. I don't want to miss anything. So take us through. I mean, because it really is about persistence. It's about grits. So like, I want to get the full story. How do we get up to your current successes?
Well, there was a second deal that we got under contract, and this was, I mean, the first one fell through in April. The second one we got under contract, I think, in September. And this was a smaller deal. We were just going to do a joint venture. Our partner was going to be boots on the ground, and we were going to fund it ourselves. Well, not ourselves, but with our partners that are here in California. However, once we were going through the process of the purchase agreement, and once we got to peek under the hood and we looked at the finances, we realized that this was definitely not a good deal. And even the lender called me and he said, hey, Mauricio, I know you guys are working really hard, but as your friend and as your lender, I have to tell you, this deal sucks. This is not a good deal. You guys are not going to be in a good position. It's going to be very hard to finance it. So we just made a financial decision at this point. I mean, we had already let one go that was just an incredible deal where all the numbers matched. So letting one go that is just not a financially good decision was pretty easy. So soon after that, George, the property manager, I had been talking to him for a while, so he had seen that we had been working actively trying to get deals. I mean, I was putting offers on anything that could make sense. And so he connected me to a direct seller. I put an offer on one of his properties. It didn't work out. And one day I got a text message as I was driving in. The text message said, hey, the deal fell through. Are you still interested? And immediately pulled to the side. I replied, yes, extremely interested. I called my partner and said, hey, can you run numbers on this one again? I'll be home in an hour. We got on Zoom, going back to the numbers, calling people, calling the lender, submitted the LOI that same night, and we were able to get our offer accepted.
So that's exciting. I know you said at one point you were looking at all the top markets, but I think that where you found the deal, the one that finally went through, most people would not consider a top market.
Yes, that's correct. But COVID changed everything because at first it was just, we were looking at all the metrics and all the data, and everything pointed out that you have to stay within at least 30 minutes driving distance from the big metros. And then COVID changed everything. People were working from home. People were commuting more. I mean, commuting less, but commuting longer distances. So now we realize if we can just need to find something that the numbers make sense, that it's within an hour to an hour and a half from one of the big cities, and that should work. And we saw a pattern where a lot of our friends, a lot of investors were starting to buy in areas that were not necessarily the top 10. So we made that work for us. The numbers worked for us, and the data supported the decision.
That's great. And that is a total trend. Ever since COVID, people have been moving out of the major metros. They're moving into the secondary, even tertiary, quaternary markets. It's just amazing for me to watch this happen. And again, you obviously have switched markets. Was this more a matter of like, hey, this deal just makes sense? Or were you looking in the Midwest in general?
I've been interested in the Midwest for a while. I looked at it other places. I just hadn't really run the numbers. I hadn't done a deep dive. And when I finally did, I realized, well, the numbers look a lot better than the other markets that I was working on. I was working in Phoenix at first. And I mean, if you know about this market, it's extremely competitive. There's a lot of money coming in where if you get outbid, I mean, the last offer I put out there, I got outbid by $350,000. I mean, how do you make that work? How do you adjust the numbers and make that work? I mean, there's zero returns for anyone at that point. So that's why we adjusted the strategy. When I found some deals and took a deeper dive, I realized, hey, the numbers look a lot better. This will allow me to give the returns to my investors that I'm looking for.
Yeah, and I just love that you are investing in Michigan. I'm a Michigander, so I've got my construction company here in Southeast Michigan. My sister and brother-in-law run that. I've got my apartment in Orlando, so I went the more traditional route of saying, hey, let's look for a growing metro. So I just love to see people coming here and making it work. I know one of my favorite investors, Jeff Holst, he came from Michigan, moved to Tennessee, he does syndications in Tennessee. That works because you get the appreciation, and he loves the cash flow that comes from Michigan, because you get to have some somewhat higher cap rates. I mean, I sympathize when you look at places like Phoenix or Orlando, when you look at certain places in Texas or even in Tennessee, you're going to see some of those so stronger markets have some very compressed cap rates. It's sometimes hard to tell. I mean, where are things going to go from here? How do you exit this deal?
Yeah, exactly. But in our case, we found that cash flow was pretty abundant in Michigan in particular,
Yeah.
and we actually had the chance to go there. We closed on this deal. We were supposed to close in February of this year, but we had some last minute issues with some environmental reports. So we ended up closing on March 12th of this year, which was my daughter's first birthday. We were driving to the mountains, and we thought we were closing on the 15th, which was a Monday, and we had everything ready. And suddenly I received a message and said, "Congratulations, we closed." So it was great, and I personally got a chance to go out to the property in May and realize how beautiful it was. It's in Kalamazoo. I mean, it's a beautiful, beautiful area. And it just makes sense. It just confirmed what a great decision that was. We love that market.
That's great. And then obviously being an out-of-state investor myself, I love to ask out-of-state investors, how did you build a team? How did you build a comfort level to pull the trigger on this one?
Yeah, well, this one was, I mean, it's just a lot of hustle, honestly. I got connected to a good lender, and I contacted the lender multiple times. He was going to be at a convention, a lending convention in San Diego. So I said, "Hey, can I just get 5 minutes of your time?" So I drove out there. It's just about 2 hours away from here. And we ended up having about an hour meeting. But before that, I had all of our finances written. I had all what everyone in our team is, the net worth was. I wanted the lender to know that I wasn't there to waste his time. Like I'm here to be serious. This is what we have. This is what we can qualify for. I'm not going to tell you, "Hey, we're going to buy a $5 million property," because we may not qualify for that. This is what we have. If it makes sense, let's keep working. So he gave me a lot of contacts, and maybe 10 or 15 contacts, from everything from property managers to environmental, all of it. And I just started hammering the phones. As soon as I left that convention, I was calling everyone, leaving messages, and the rest is history.
Awesome. And it's a perfect segue because I was just about to ask you about grit. So I know that you are a realtor that's like a 24/7 job. Your wife, she's an industrial engineer and a realtor on the weekend. You obviously know how to hustle. So tell us, what's your secret? What keeps you going?
Well, at the end of the day, I think we're in the right industry. I think if this was something where we have to sell juices or whatever, and then 15 years later, we'll be at a certain position, that would be not too encouraging. But we're in an industry where you can grow pretty fast. I mean, your life can be significantly different in a matter of just a couple of years, 2 to 3 years. So we're in a 5-year plan, and we're realizing that in just 1 year, although maybe financially things haven't changed much, but we've definitely planted a lot of seeds for things to be different in the coming years. So that's one of the things that keeps us going the most, is knowing that we're in the right industry, that we're taking the right steps. And of course, the main thing is family. I mean, we have a daughter. We don't want to be we want to be there with her. We want to enjoy her as much as possible. And I mean, that's truly the main reason. I mean, there's no way I can not have time 2 or 3 years for her in the future because I didn't do enough work now.
That's beautiful. And that totally resonates with my personal experience. Every job I've worked since becoming a research scientist has been correcting that original error and saying, "Wife, this job means we'll be able to spend more time together."
That's great. That's great. No, it's true. I mean, at the end of the day, the combination of family, of obviously wanting to spend more time with family and securing a future for our daughter, plus the combination of knowing that we're in the right industry. Like I said, I think that's very key. If we were here to try it out and let's see if it works, and maybe if it doesn't work, I'll do something else that's different. But this is it. I mean, real estate is as strong as it gets. I mean, nowadays, anyone with a phone and a bank account can buy crypto and say, "I'm an investor." Maybe not. But in real estate, it's tangible. There's appreciation. There's tax benefits. I mean, you can't really go wrong with real estate.
I love it, and it is the right place, the right time. Statistic I heard recently, I believe we're about 3 million homes short of where we would be if builders had kept building as they would have if there hadn't been a Great Recession. And you got to imagine if 1.5 million housing starts, if that's the long run average in America, and this is just my analysis here. Suppose we get up to 2 million, right? Well, then it's going to take 6 years to clear the backlog. And I think that that's probably an underestimate. I think we got at least a good 6 years run in real estate because of this underbuilding. And just imagine where you could be in 6 years. I mean, just look where somebody like Mauricio is able to move in a year, in 2 years, in 5 years. We're going to be in a completely different place.
Absolutely, and I think it's. I mean, you said it right. I mean, there's the housing shortage is it's incredible. I mean, in my residential business, I put an offer on a property, and I'm competing against 20 other people. I mean, 4 or 5 years ago, I was competing against 2 or 3 offers. Last listing that I had, I mean, it was sold at 40,000 above asking, and I wasn't even expecting, and offers they just kept on coming. So there's such a need for housing. So the need for apartments to rent is not going away. We have a smaller multifamily in here in Los Angeles, and 8 units, and we just leased it this week. We were originally underwriting at 2,200 for that one, and we ended up leasing it at 2,499, just because people kept asking and they kept overbidding. So I mean, there's such a need. I think this is going to go for a while.
Yeah, absolutely amazing. And again, the right place to be. Warren Buffett always likes to say, "Hey, I don't want to be in a business where I can be outcompeted on a penny." He doesn't like commodities. He likes the large profit margin. And it's hard to do this, right? It's hard to become an apartment owner, hard to put together a joint venture. It's even harder to put together a syndication. And I understand you're also, in addition to being a syndicator, you've also got another hot topic these days. You're putting together, or have put together, I believe, a couple of tenant in common deals. So can you tell us, how does that work? What are the advantages?
Yeah, this is something new. This is something that I wasn't really expecting. It just came, I think, through connections. Once you start getting in contact with a lot of other people and they see what you're doing, and I think that they see that you're serious, that this is not just something that you're trying. You start connecting with people that are a little bit more advanced. So I connected with a group here in Los Angeles that are doing very, very good. They're doing smaller multifamily, and they're doing ridiculously well, to say the least. So they had a project, and they brought me on board, in which we're looking to buy smaller multifamily, 5 to 12 units, and change the title from rental and selling it as residential via tenant in common. That means that all the buyers share one per cell, and they buy a portion of it. But the benefit is that we are selling it at significantly lower than market rate. And with such a housing shortage, we see this becoming a trend. I mean, I know that it is a trend in the Bay Area, and we have done a lot of research here. We've seen that it's growing a lot. I mean, last week we had we saw the first conference, or the first webinar about ticks. That's what they're called. And we realized how big this industry can be. I mean, there's just an incredible need for housing, for affordable housing here in Los Angeles. And if we can do that, and by doing that, offer our investors much higher returns than we originally expected, I think it's a win-win for us.
That's great. And you know what I'd like to do is try to head into our final phase of the interview. I want to give you an opportunity to give back and give some entrepreneurs maybe a little chicken soup for the entrepreneurial soul. Do you have any advice for a young entrepreneur, a new entrepreneur, or maybe for your younger self?
Yeah, I mean, I definitely do. I think that when I started this whole multifamily journey, I think that the biggest mistake that I made, and if I could go back, this is definitely what I would change, is that I started doing everything on my own, because in residential real estate, you do everything on your own. You pick up your own open house signs, you do your own signing sheets, you do everything on your own. So when I started this, I started putting everything together by myself. It wasn't until COVID that I realized that I needed to reach out to people. And that's when I started networking. And networking made an incredible difference. I can't stress this enough in the journey, because it's not that you connect with someone hoping, hey, this might be my partner. It's just you're creating friendships. You're networking with people that have the same mentality. I mean, think of last year when we were raising funds for our property. We were in the middle of COVID. We had a nasty election. I mean, it was just, everything was just the news, and everybody was trying to bite each other's heads off on social media. And then you connect with your multifamily crew, and everyone is positive. Everyone is going the same direction. So I think it really helps you stay focused by connecting with the right people.
Okay, great. So I'll turn it around. Are there any questions you'd like to ask me?
Yes, I mean, obviously I know that you went from, you definitely are an analytical person. So being someone who's very analytical, I've found that a lot of folks that have the same similar mentality have a hard time making that jump from being in a comfort zone where you're behind perhaps a screen to taking the jump to being an entrepreneur and perhaps buying, like you, a multifamily in Orlando. What was the hardest step for you, getting out of your comfort zone? What was the hardest part?
Well, if you're speaking in terms of how to become a people person,
Yes,
when I was 18, my best friend, Kelly Miller, he gave me How to Win Friends and Influence People by Dale Carnegie. And I can't begin to tell you what an amazing book that is. I mean, the simple things like remembering people's names, learning how to pronounce them correctly, and just learning one thing about people, right? You meet somebody, remember one thing. Next time you go back to talk to them, it's not like, oh, I'm sorry, what was your name again? You know, you ask them about their gardening or, their surfing hobby, whatever it is. I mean, that's how you build rapport. And it's amazing. These are all simple ideas. It comes easy to some people, not so much to other people. But one thing that book taught me is that if you become interested in other people, people are interesting.
Oh, that's great. Thanks for sharing.
And then the second thing I think came from being a research scientist. So again, I began to feel like that environment was very stultifying. I was in biology, and I noticed a couple of things. First of all, not a lot of numbers people in biology. So I thought, well, I can differentiate myself just by knowing a little bit about numbers. Next thing you know, I went into genomics and then into computer science. So again, it's the old adage about how in the Valley of the Blind, the one-eyed man is king. So I didn't need to know much about numbers at first. And then I realized, hey, I like this. This is good. And the other thing is that I didn't meet a whole lot of great communicators. There are a few people who have a great story to tell, some top researchers, but there are not a whole lot of networking in science. And so I really began to bristle against that. I wanted to learn more about numbers. I wanted to learn more about people. I wanted to network, and I wanted to grow. And I eventually realized I wanted to not only work in industry, I wanted to be an entrepreneur.
Wow, that's great. I mean, talk about getting out of your comfort zone and looking outside your own sphere. Huh? That's great. That's what I wanted to know, because I do see a lot of engineers in this industry. They're usually not the people person. So that's good. Thanks, George.
Awesome question, by the way. So let's just send our listeners out with, how do we connect with Mauricio and Brickstone Investment Group?
The easiest way would be our website, which is brickstoneinvestmentgroup.com. And I'm also very active on social media, mainly on Facebook. That's how I built my residential business. Mauricio Roque on Facebook, also on Instagram. I'm trying to keep up with my LinkedIn. I'm still working on that, but mainly I would say Facebook or my website.
Beautiful. Entrepreneurs, self-education, grit, and networking. That is really today's story. Thank you, Mauricio.
George, thank you so much. What an honor. Thank you.